So let's consider the sperm whale. This is, by the way, I wouldn't look at me. There's some screens over here. The sperm whale is a majestic creature. It rules the ocean. It was the prey for thousands of ships. It was a basis for all kinds of interesting stock schemes and ownership schemes in the 18th and 19th century. It was one of the biggest and most successful commercial ventures of its time, the hunting of the whale for its oil. Often the ships, and you might have read this in Moby Dick if you remember from high school, often the ships would go away for years before they would come back with their own form of liquidity. So as we're thinking about now about how long is it until we see liquidity in our own business, I'd like you to think about how long it took for whalers to go out to the South Pacific to hunt for whales, and also understand that the gestation period for a whale itself is 15 months. 15 months from conception to birth. And then it lives about 80 years, which is about the same amount of time as now from when SEC 33 and 34 were written, okay? So we all have a lot to do with the whale, and it's not just because of Brock Pierce, who made a quick stop outside of here a few minutes ago, but because we need to be patient like a whaler. We need to be patient like the mother of a calf, and understanding that this is going to take a little while to happen. The first sign of imminent adoption to me has been the arrival of the broker-dealers. How many people in this room, and I can't even see your hands, who are paying attention, will say, yes, I'm a member of a broker-dealer, or I am a former broker-dealer. The arrival of the broker-dealers and the interest taken in our industry and creation of this industry by broker-dealers is probably one of the most important harbingers of the success, the coming success of the digital asset space. Here are a couple examples which more pertain to our industry, our native industry. In 2015, Goldman Sachs, who themselves are a broker-dealer, made a $50 million investment in a company called Circle. In 2018, Coinbase made an investment in a broker-dealer called Keystone. I think Stephen is here from Coinbase for that. 6 months ago, Circle then made an acquisition of another broker-dealer called Seed Invest. The notion that this kind of money is being spent on broker-dealers who are involved in crypto is a very, very strong momentum bet by established players that the digital asset space is worthy of investment at the infrastructure level. And I think this is a great sign. My company spends a lot of time working with broker-dealers, and I've spent a lot of time out in the hallway since I've been here at the conference speaking to broker-dealers. And probably broker-dealers are some of the most interested and engaged participants in this space. In order for this to be successful, it needs to be successful for broker-dealers. I understand that some people say long Bitcoin, short the bankers. I'd like to hedge that bet, okay, and say long blockchain and then long broker-dealers. The next area where we see intensified interest and involvement is by regulatory agencies. Regulatory agencies provide guardrails. In this case, they're providing a framework or they're providing rules. And another thing that happened while I was out in the hallway today is I met with a group called Paragon Coin. Are you all familiar with Paragon? So Paragon Coin is a project. It's an ICO project, which in 2017, it ran an ICO, and it successfully raised about $12 million. Well, in 2018, it was subject to an SEC order. The SEC order said you must perform restitution for your investors and make them whole, and you're to go through this process. And by the way, here's a bill for $250,000. Thank you very much. Well, I was very happy to see that after going through an intense interaction with the SEC, that there is in fact a group out there who performed an ICO, went through SEC action, responded to that action positively, and was here at the conference talking to platform providers, et cetera, about how to work together with the industry to rationalize our offering. Some other elements that we see is FinHub. The creation of FinHub, along with the adoption by broker-dealers, I think is an excellent sign that regulators are taking this space seriously. The regulators wouldn't bother spending all this time, I don't think, if they didn't see that there was a market that was big enough for them to regulate and big enough for them to start rationalizing. But not only did they create FinHub, but 6 months later, they provided a framework. Now, yeah, is this framework everything that we want? I'm not sure. I'm not the securities lawyer in the audience, but my securities lawyer co-founder thinks that the framework is a pretty good start. So I'm actually excited that the SEC has spent the time to start putting more clarity around the issues of issuing digital assets. By the way, I'm not one of the people that's going to say that there's been no clarity. The thing that we're doing, the digital asset, is mostly just another form of security. It has one special feature, and that special feature is programmable liquidity. I think it's the coolest thing about what we're working on. As a guy who owns interests in 5 private companies and who can't sell any of them, I'm intensely interested in finding ways for me and the other folks like me, people who start and run venture-funded companies, to find ways out of these positions. I think that digital asset tokenization is an excellent way to exit illiquid positions in venture-funded companies. It's not great just for some capital formation or for real estate, but what we see now is we see FinHub and the SEC helping us to start putting a framework for fixing some problems related to liquidity of private assets. VCs investors are another category where we start to see involvement. And when I say investors, I don't mean retail investors. There are a lot of questions in this space right now. People say, well, where are the buyers? Who are buying these security tokens? You know, where's the liquidity? Again, I hearken back to the whale and I say, give it some time. But probably the most interesting kind of 2 incidents that I saw happen over the last 2 weeks, I wanted to bring to your attention. And this is really the whole reason why I wanted to present, because I wanted to bring these 2 things to you all. About a month ago, I was alerted to the fact that Andreessen Horowitz is leading a $300 million investment into a company called Carta. If you're not familiar with Carta, Carta used to be called eShares. Carta is a cap table company. Now, I'm interested in this kind of geeked out stuff because I run a cap table company on blockchain. So I was like, wow, this is super interesting. Why is Andreessen Horowitz investing in this late stage cap table company? Well, then I found a copy of the deck and I found out that Carta is planning on creating something called Carta X. Carta X is a private exchange. Carta currently runs thousands of venture-funded companies on its, internet, behind the firewall, centralized cap table technology. But they're thinking, oh, here's how we're going to make cap tables exciting. We're going to create secondary liquidity off of cap tables. And we're going to do it using a private exchange, which sounds a lot like an ATS. But then the next thing happened, which was really, really mind-blowing to me, which was that A16Z, Andreessen Horowitz, then rehypothecated their entire venture capital firm. They actually said, we're not going to be a VC firm anymore. We're going to be a registered investment advisor. Now, what's that mean? Well, it basically means that they're going to be able to buy and sell shares in private companies with less restriction. So they just invested in a cap table company. They've been investing for years and created a $300 million crypto fund, and now they're going to start buying and selling secondaries in venture-funded private companies. Now, if that is not the most bullish sign that digital assets are going to take off, I don't know what is. These guys get all of their LP money from huge funds, pension funds, limited partners from family offices, on a thesis of secondary liquidity around private assets. Digital asset tokenization is precisely about bringing liquidity to previously illiquid private assets. The notion that now Silicon Valley is going to go deep into tokenizing assets, into helping secondaries in private companies, I think that is an incredibly bullish sign. So I wanted to share this one thing with you. I want you to think, wow, not when Lambo, but more like when Camry, okay? This is the Camry moment. It's very reliable. This is going to be normative for us. And I want you to think about this over the next year. And then, if you're bored and this wasn't enough for you, I'm going to grill some venture capitalists on Wednesday afternoon over on the main stage at CIS, and finally get to ask them questions like they're always asking me in the meetings when I go ask them for money. So again, my name's Dave Hendricks. I'm the CEO of Vertalo. If you would like to learn more about, tokenizing venture-funded assets and cap tables on blockchain, I'm out lurking around the corner. I thank you for your attention, and thanks so much for paying attention. Cheers.